through a weaker currency. But Friedman didn't just warn about the economic consequences of a common currency. He also predicted that a monetary union wouldn't be able to hold together politically. For these reasons, he thought the euro wouldn't even exist for a decade. Now, the currency has outlasted that prediction only by a year, but its viability is very much in question. We've seen a lot of political fireworks in Europe already, and I expect we'll see a lot more.
Okay, Brian, so you agree then, obviously, with Milton Friedman that the very existence of the euro is now in question?
Absolutely. As I said, history shows us that financial crises lead to sovereign debt crises, and sovereign debt crises tend to lead to currency crises. That's exactly what we're seeing in Europe with the euro.
Of course, the big question, what's going to happen next?
Well, history also shows us likely contagion would be next. A currency crisis in one place triggers crises in other countries with the same problems. And as we know, these problems are bloated debt loads, high deficits. So two countries that would fit the bill would be United Kingdom and Japan. So I think the pound and the yen are currencies that are in danger of experiencing the same type of crash we've seen in the euro. Of course, the United States has similar problems, but our currency is uniquely positioned, especially during a global slowdown. We have the deepest, most liquid capital markets and the largest, most robust economy in the world. So the dollar likely continues to win as the best alternative, a place of relative safety.
Okay, Brian, we'll be back in just a couple minutes to talk more about the pound and the yen and pick up some of your picks and pans in the currency markets. You stay with us. First, though, let's figure out how average investors can benefit from your predictions, Brian, using ETFs. Joining us from Austin, Texas, with some currency plays you can buy and sell just like stocks is Weiss Research ETF expert Ron Rowland. Ron, Brian told us that every currency trade is a pair trade, basically shorting one currency and going long on another. Do ETFs basically do the same thing?
Jamie, there's about 35 different currency ETFs listed on U.S. stock exchanges. The vast majority of these are relative to the U.S. dollar. Let's use Currency Shares Canadian Dollar Trust as an example. When you buy that fund, you're not just buying Canadian dollars, you're buying the Canadian dollar-U.S. dollar pair and shorting the U.S. dollar in the process. So the performance of the fund will reflect the strength of the Canadian dollar versus the U.S. dollar.
Okay, Ron, but Brian thinks the U.S. dollar will continue its upward momentum. Are there funds that bet on a stronger dollar?
Yeah, the simplest of these might be the PowerShares Dollar Bullish ETF, ticker symbol UUP. Now, this fund is essentially long the dollar and short a basket of major foreign currencies. So when the dollar gets stronger, this fund goes up in value.
What if you just want to bet on the dollar against one particular currency, say maybe the euro?
Well, one option would be to sell short one of the ETFs that bet on euros. But investors who are working in an IRA aren't able to do that. So another option would be an inverse currency fund. One of those is ProShares Ultra Short Euro Fund. Its ticker symbol is EUO. Now, this ETF does the shorting for you, allowing you to buy it in an IRA, and it does it with 2 times leverage. So if the euro loses 1% today, this fund will go up 2%. It's obviously been a very good investment the past 6 months because of the euro's recent tumble.
Ron, not all investors are going to be as bullish on the dollar as Brian is. In fact, we're going to be talking to 2 experts a bit later who think the dollar is going to see a big decline. Is there an ETF for people who agree with that opinion?
Yeah, I mentioned the PowerShares Dollar Bullish ETF earlier. Well, there's also a PowerShares Dollar Bearish Fund. Its ticker symbol UDN. Now, it gives investors exposure to a basket of currencies against the dollar. But obviously, this ETF hasn't done very well lately.
Okay, Ron Rowland out of Austin, thank you.
Thank you.
Coming up next, Bryan Rich will be back with his picks and pans. He'll tell us why the U.S. dollar won't be the only currency with a big upside. And later, we'll head to Asia and one expert who's predicting a sea change in the currency market. Can the dollar actually lose its status as the world's reserve currency? Stay tuned. We're back in a moment.
Greece sparks a 20% fall in the euro. Is Europe's monetary union doomed to fail? China vows to revalue the yuan. But is it too little too late? Hi, I'm Bryan Rich of World Currency Alert. And my goal is to help protect your savings and net worth from the global currency storm. and even profit from it. In my monthly newsletter, I give you specific recommendations and timely alerts for when to get into a currency position and when to get out. Just the type of profit-making advice you need today.
$13 trillion in debt, 15.3 million Americans out of work, 4 million homes delinquent, 2.4 million borrowers expected to lose their home by year-end, 2,259 banks at risk of failure all over America. Call this number or go to this URL to get the shocking free report that Washington does not want you to see.
Welcome back, everyone. I'm Jamie Holmes. In every episode of Money and Markets, we, of course, give you our picks and our pans, and Bryan Rich is back to do the honors this week. Thanks so much, Bryan, for being here.
Sure.
Bryan, you said earlier that the UK and Japan may be the next dominoes to fall in this sovereign debt crisis. I guess I can assume here then that the pound and the yen are among your pans in the currency market, right?
Yeah, I think the pound and the yen could see the same type of devaluation we've seen recently in the euro. As you said, Jamie, all you have to do is follow the sovereign debt crisis to determine where the next currency crisis will strike. It started in Dubai, then moved to Europe, where we saw the risk of default pop up at Greece and Spain and Portugal. It goes without saying that investors should stay away from the euro, which I think could fall much further and frankly even end in a breakup of the monetary union. But as far as the sovereign debt crisis is concerned, the next shoe to drop, I think, will be the UK, which has the highest budget deficit of any G7 country.
But the new British government is addressing that, or trying to address that problem with some austerity measures. You don't think that strategy is going to succeed?
I don't. In fact, I think it may end up making things even worse. If there's one economy that can't afford belt-tightening at this stage of its recovery, it's the UK. It was the last major country to emerge from recession, and it could be the first to go back in. In fact, a former policymaker at the Bank of England said last month that these proposed austerity measures would certainly have that effect of putting them back in a recession. And if that's the case, the British pound would almost certainly decline.
Okay, Japan now. What about the yen?
Right. In a world where debt and deficits are scrutinized, Japan has a massive debt load, by far the biggest in the world. And Japan's economy has been unable to generate any domestic demand for decades. In addition, they've got a rapidly declining savings rate, an aging population, non-competitive interest rates. These are all things that are a recipe for disaster, especially when faced with the challenges of funding a debt load that's more than twice as big as the size of its economy. I think Japan will have ultimately to devalue the yen to reduce the value of this debt load. So in general, the yen could be in for a huge plunge. Overall, I think investors should avoid exposure to the yen, the pound, the euro, all of these currencies at all costs.
Okay, Bryan, we've gotten your pans out of the way. Let's move to your picks now in the currency market. What are those?
Right. Well, we've already talked about the U.S. dollar. It will continue to rise, in my opinion, because of this global economic crisis. Investors will always want to find relative safety, and they'll find it in the dollar. But also, on a relative basis, the U.S. economy is doing better than most, and that underpins dollar strength as well. But I like the Canadian dollar in addition. During the sovereign debt crisis, Canada has fared relatively well. It hasn't had to bail out its banks, and its economy is projected to do as well, if not a little better, than the U.S. economy. In fact, in many ways, the Canadian dollar, or Canada in general, is a bit of a replica of the U.S. So while I don't think the Canadian dollar will do as well as the U.S. dollar the next year, it's a good bet against other currencies, I think.
Any other currencies out there you think are going to do well on a relative basis?
Well, it's not a paper currency, but a hard currency. Investors view gold as a safe haven during times of crisis. So I think gold prices will continue to go higher, and I think the U.S. dollar will go higher with it.
Okay, Bryan Rich, thanks so much for being here. We
Great.
appreciate it.
Thank you.
Coming up, a view from Asia. We're going to take a much closer look at the future of the Chinese yuan and find out why one expert thinks international trade could soon be conducted in a single world currency. That's next on Money and Markets.
Hi there, this is Mike Larson, editor of Weiss Research's Safe Money Report. You can't just focus on stocks anymore if you want to be a successful investor, and you can't just focus on the United States either. You need to know what's going on in Asia, which Tony covers, You need to know what's going on in hard assets like oil and gold, which Sean and Larry are on top of. You need to know what's happening in currencies, the specialty of Bryan Rich. You also need to keep abreast of the best ways to build wealth in an era of near 0% interest rates, and that's what my colleague Nilis Mativ covers. And of course, you need the top-down, big-picture analysis that Safe Money delivers to you each and